Hello, it's Rhonda Thomas, and we are about to do Managerial Accounting's Chapter 1 coursework. So let me go ahead and share my screen. I'm going to try to be as brief as I can. I know you sometimes need some guidance of how to work the problem. So here's what I'm going to work. I'm in Chapter 1 coursework. Go to the other video for the intro exercises for Chapter 1, if that's what you're interested in. Okay, so I'm going to do the first three, number 1, 2, and 3, and then you should be able to work your way through the number 4, okay, with the information that we learned together doing these problems, okay? This is our first chapter to learn about managerial accounting, and the first one we're going to do is a financial statement. Now, you're going to get different numbers than I have, so you're going to have to follow along and see where your numbers go. When you're getting ready to do any kind of statement in accounting, I like to see one first. So here in my Excel spreadsheet, notice we're going to be putting together an income statement. So here's what an income statement looks like. It looks a little different than this one. They've actually, for the cost of goods sold, they have put in the detail for how cost of goods sold actually gets calculated. On this one, they're just telling us how much it is. So it's missing that piece. All right, so we'll get started on this. The other thing I highly recommend is if you've been in class, you've seen me do my T accounts. Well, I really think it's really important for you to understand that now that we're a manufacturing business, we need to understand the relationships between the different accounts, because we are still doing accounting, even if it's not financial. So we're getting ready to do an exercise that we then need to know January's ending balances. So if you're getting ready to work a job order cost system or processing cost system, you're going to need to have 3 inventory accounts. They all have beginning and ending. Okay, beginning can be 0. They can all have something that comes in the account and goes out of the account. I highly recommend using the subtotal inside of that account that's called available. Okay, that will save you a lot of heartache. If you can just follow this recipe, I think you will understand what we're getting ready to do. Okay, cost of goods sold, that's what happens to finished goods when they're sold. This is the balance sheet up here. Okay, this is the income statement. There's an income statement account, and I just put some T accounts on here just in case we need some. We're going to have to get used to something called manufacturing overhead. I labeled my debit side of the manufacturing overhead as actual and applied. Okay, if you'll get used to that, that will help. Okay, so we're getting ready to put together an income statement. So they've given us this information here. So let's start with the income statement. Okay, let's start with it. They say that they're selling goods. Most of the time, whatever you're selling, the revenue or the sales will probably be one of the biggest numbers in the problem. And if you look here, you'll see, yes, that's true. So let's put in that amount. And then you're simply going to follow this example from the book. Okay, from the book. So this is the income statement. We're not doing a statement of cost of goods manufactured yet. And it is okay to put, I'm going to try it, to put the negatives in. It used to not be okay. If we put negative in there, it would count us wrong. So they're doing better. I like to put the signs in so that you can, somebody that doesn't understand accounting can at least follow what's going on here, right? And when you add up both of these, you get that amount. Let me see if we're still continuing. Okay, so we got revenues, and then right below, so F is revenues, G is cost of goods sold. Here's what I would put in. I would put in my labels first. Okay, so we have revenues. Revenues means sales, cost of goods sold. This is a calculation here. Remember, gross profit is not an account. It's a subtotal on the income statement, okay? And they're showing that here. All right, so then you have selling expenses, right? So if you'll go from F to I, you will get your income statement. Then we'll worry about A through E. All right, so when you put everything in here, whether it's pluses or minuses, you're going to end up with a certain amount of net income. Now, you're going to have different numbers than I do, okay? So don't try to make mine fit into yours because it won't work. If you just happen to have the same one I have, then I think that's just luck of the draw. Okay, the other thing then is we're going to use these T accounts. Just a second here, I'll get this moved over. We're going to use these T accounts to feed in the puzzle pieces that they have given us for the T accounts, okay? T accounts, if you're not real familiar with T accounts are used to represent the ledger accounts of the various assets, liabilities, equities, revenues, expenses, okay? I try to label whether a particular account is an asset, a liability, okay? And I guess I need to do just a little more to these. I also like to put their normal balance that you can expect to see from that kind of an account, because I know that it might have been a while since you've done financial accounting and you constantly need a refresher. I need refreshed about a lot of things too from time to time. So it goes better when I kind of fall back on my suggested ways of doing things. I like to label everything and I like to have a calculation ready to go to back up what I'm doing in case I have a mistake here. If I find a mistake here, then I can go back and make sure that I've put everything in. So here's where we're going to put things in. So there is no beginning balances in any of these inventory accounts. So this is their first month of operations. So beginning balances are going to be zeros, but I went ahead and accounted for them anyway, right? Okay. So then this asset account is going to end up with a debit normal balance. And when we purchase materials, that causes the material account to go up. Now, if we would have something here in the beginning, then we're going to add these two numbers together to find out how many total available materials, how much materials we have available to us. This will help you. Okay, this will help you calculate a lot of things. And so please follow what I'm asking you to do. And I think it will make more sense as we go through this. So, all right, so all we're going to do is plug in. So now it says used $53,900 worth of direct materials. So out of this inventory account, and then it goes into work in process. Now I did use an abbreviation there, but that's fine. And it can have a beginning balance, and we looked for it, and it doesn't. Okay, so this amount of $53,900 is direct materials. Direct materials is coming out of this materials account. Now be careful because some materials can be direct and some can be indirect. Anything indirect is going to wind up in this overhead account. Okay, we don't go into a whole lot of detail on that yet, but as we get through chapters 2 and 3, you'll see that. So we want to show, here's a debit and a credit. Okay, so well, I didn't see the debit for this materials purchase. Okay, if you need to see that, then I'll make an AP account, accounts payable, right? Which is a liability. All right, so sometimes you kind of have to just, and you have to understand that for every debit that you see in an account, there is a credit somewhere, except if you see the asterisk numbers, that is to let you know that that's a subtotal inside of this T account so that we can calculate a little better on some things. So then if you wanted to see AP for the purchase, it says purchase $70,000 of materials. It didn't say if it was on account. It didn't say if it was cash. So I'm going to go with cash. Okay. If it doesn't say on account, then you pretty much have to assume that it's cash. All right. And so cash has a debit normal balance. And so then when this purchase is made, we debit cash for the 70,000. So I wanted to show you that just in case that's part of what you need to see. All right. You need to memorize this setup right here, if you can. Okay. Here's where the manufacturing is going to happen. We can have a beginning balance, and remember, whatever is in the beginning of work in process, and we are looking at the first month of January. So there was nothing in the month before because this is the first month of business. Okay. Direct materials is going to come in for the month of January. So we want to recognize the time period that we are looking at. Okay. So, and this is the first month of business. So it looks a little different than if we had been doing business for quite some time, because I pretty much guarantee you that most businesses are not going to let their inventory accounts run out to zero, because then you've got, you're waiting for inventory to turn into something you can sell. All right. So the product costs that come into work in process are direct materials, direct labor, and manufacturing overhead. The first direct materials comes out of the materials account. Then you have direct labor. My direct labor is $80,500, and that's going to come out of wages payable most of the time. Then it says we had manufacturing overhead incurred. Incurred means it happened for that period of time. And manufacturing overhead, that would be a credit to manufacturing overhead. Don't get too hung up on this one right now, because we'll flesh this account out more when we get into 2 and 3. All right. Then we have these 3 that came in the month of January. Then you have a subtotal for the costs for the period that came in. Okay. Then you're going to add anything that's up here in the beginning to those period costs. And then you're going to have an amount available to be the costs available in work in process. That's all the manufacturing costs. And we didn't complete everything because we have an ending balance here. If we would have completed everything, then this account would have 0 in it. And the cost of the goods manufactured, which is what COGM is, they said transferred 188,300 out of work in process to finished goods. That's also known as cost of goods manufactured. So when items are finished, they come out of manufacturing and into finished goods. So that is a debit and a credit of moving those costs from one inventory account to another, right? So finished goods can have a beginning inventory as well, but it didn't because it's the first month of business. So the amount that came into here from WIP was 188,300, and that's up here. There it is, transferred. Okay, so these A, B, C, D, E, okay, and F are all going to be reflected down here in these accounts because we've got to come to the ending balances in each of these accounts. Okay, so you're going to have to put this stuff in. All right. So now our last piece to put in to our T account template is the cost of goods sold. So finished goods are ready to be sold. And when they are sold, the amount gets credited and debited to the account cost of goods sold. Now, cost of goods sold does not have a beginning and an ending. Okay, you might have to add a couple things up inside of here, but this one is on the income statement. Okay, income statement. These up here represent inventories on the balance sheet. Okay, inventories on the balance sheet. Remember, inventory or balance sheet accounts are permanent. Permanent. Okay, income statement accounts are temporary. Okay, remember we back from financial accounting, we close temporary accounts. So I do want to put temporary here. And I also want to remind you that temporary accounts get closed for the period. Remember the closing process? If you don't remember what that is, I understand. It's probably been quite a while since you've done something like that. I want to bring this back over here. Okay, so all right, so once again, out of finished goods is the amount of cost of goods sold. They gave us that. They gave us that. And when it gets credited finished goods, it gets debited to cost of goods sold. Oh, I wanted to also say that temporary accounts get closed. Okay, temporary accounts are closed at the end of each period, right? So anything that's an expense, now this payable goes on the balance sheet, and so is the cash. So be careful, all right? But all your revenues, expenses, and your dividends get closed for each period of time, so you can accumulate the next period that you need to. All right. So if you put in the information from A to basically E, I did also put in G. I don't think, no, yes, we do need G. We need G to tell us how much went out of finished goods and how much remains. So what you see here in green is a number that I calculate. Okay, so I put in what I purchased. I come with an available cost in materials, and then they told me that $53,900 was used in materials. So it goes out of this account and goes into here. And then I'm going to calculate the amount I have available and subtract how much went out of this account and into WIP. And you've just found your first balance of your materials account. Okay, moving on to work in process. Okay, we would check for a beginning balance, which we didn't have. We found out what our direct materials are, our direct labor, our manufacturing overhead, and then we calculate those three. In case we're ever asked, what are the costs that came in during the month of January? Okay, so just get used to doing that. I put a little asterisk beside beside that subtotal. And then our second subtotal in this account is going to be available. So available is going to include anything in the beginning plus the cost that came in here from the period of time. Okay. Then they told us that we had transferred 188,300 of work in process to finished goods. Now, please make sure there are your direct materials is B, direct labor is C, and manufacturing overhead is D. So I've already plugged these in and totaled them. And so this is like a big puzzle. Okay, it's like a big puzzle. You just have to get used to where the pieces go. And you also need to be able to work backwards and forwards through this thing in case you have to find something, because they have to give you enough information that you can find something that's missing. Okay, so now here we are. Here's how I figured the balance in work in process. When I figured out how much cost we had available in the account, then I subtracted the amount they said transferred out. Okay, the amount that transferred out. So we have a balance in work in process or WIP of 59,500. So you'll want to plug in your numbers and see if you can get something like this to work out. Okay, and then when you transfer out of WIP and into finished goods, you would look to see if this has a beginning balance, which it didn't have, and you would come up with an available subtotal of all the finished goods we had. Okay, all the finished goods, we had 188,300. Then we've got to show that the amount from cost of goods sold, right? This is where our inventory is sold out of. Okay, costs accumulate through these and end up here. And then they leave the balance sheet once they're sold and go down here. So the amount that we show for cost of goods sold as leaving finished goods with a credit, we're going to show it coming into the cost of goods sold as a debit. Okay, and we had to put this in here in order to calculate how many finished good dollars we still have, right? So we had 188,300 and we subtracted 149,800. So we have an ending balance of 38,500, and that's how I put all of those in. Okay, so if you need to slow it down, back it up, do what you need to, I understand. Okay, so here's another thing that you might want to consider doing. Now, this was our income statement. I spent a little bit of time learning how to calculate this. Just write it down on a piece of paper. I just practiced a time or two. In fact, it was Professor Acal that had us practice this from time to time. So when we got to something here in managerial accounting, we would plug in and it wouldn't be so difficult to think about. Some of this stuff has to be memorized a little bit because that's just how accounting, you're not born knowing this stuff, okay? And accounting likes to calculate something in a column. So these two get calculated here. All right, so that's how I got my net income. And once again, you have to remember to subtract the cost of goods sold. That's why I like to put the sign there, so that there's no question as to that this has to be a smaller number when this gets subtracted. These two are subtracted, but they get added together. Okay, they get added together, and then they get subtracted from gross profit. All right. Okay, let's move on. Okay, so this is kind of a big cost classification example. All right, so managerial used to be called cost accounting, and it's still its nickname. In this problem, we're going to divide up various costs into two pools. The first pool is a product cost, okay, and a period cost. Within the product cost, you'll find your direct materials, your direct labor, and your manufacturing overhead. I tried to put a couple of words here that might help you recognize when something is overhead. The fact that this says direct and direct materials and direct labor, for the most part, are fairly simple to figure out, okay? If you can't make it be a direct material or a direct labor, then here is the default bucket, right? When you don't know what to do with a cost that's in the plant, it's got to go somewhere. So just remember that the overhead account is the default bucket. Okay, so let's go through these, and I'm going to go pretty fast. I'll try to tell you the key word you should be focusing on. The period costs, right? Period costs are selling and admin, and that's usually the order that they're put in on the income statement, right? So here we are, putting it in on a little formula, okay? And the words for selling you'll want to watch for is store. Anything to do with sales commission. Okay, now that isn't sales, that's not revenue, but anything that we spent money on to help us increase our revenue is game. Advertising, marketing, sales commissions, any kind of money we spent on advertising or marketing, obviously, right? And then administrative expenses. So the key words for those: office, headquarters. They're thought of as company umbrella expenses. So an umbrella tends to cover the whole place. Okay, so I just remembered another word I want to make sure you associate with overhead. Okay, I'm going to put depreciation here. I'm going to put factory depreciation. So sometimes you get depreciation of a store, or you might get depreciation of an office building. Well, then that depreciation would go here, right? It just depends. So I'm going to put store depreciation here, just in case. And office, anything in the office depreciation. Remember, depreciation in accounting just means that you are expensing an asset. Okay, you're expensing an asset. So that's all it means. Okay, so let me fix this one here, and then you should be able to read the word store depreciation. So let's knock these out pretty fast. Okay, and if we make a mistake, we go in and we fix it. Things happen sometimes. So how about the annual picnic for who? Plant employees. Okay, that's going to be a product cost, and it's going to be manufacturing overhead. The cost of fabric used by a clothing manufacturer. So we manufacture clothing, and if you're going to make clothing, I would say fabric is a direct material. So this is a direct material product cost. The cost of the plastic for a toy manufacturer. So just like fabric was for clothing, yep, it's going to be product cost, direct materials. The cost of a sewing machine needle used by a shirt manufacturer. Okay, well, I don't know how expensive those needles are for a sewing machine, but I'm pretty sure that sewing needles are not considered substantial. So it is at the plant, and it's not a direct material or a direct cost. So the default bucket is overhead. Okay, the cost of television commercials. Okay, here's our first period cost. It's a period cost, and it's a selling. Okay, here comes the word depreciation, kind of like what I said over here. Oop, I just saw that I spelled office wrong. Sorry about that. Okay. All right. So depreciation of what? The copy machine. Where? In the marketing department. Okay, the marketing department. So that's going to be a period cost in selling. Okay, so there is no overhead in selling and administrative. You just lump them in with the period costs. Okay, how about the depreciation of a microcomputer used in the factory? Okay, so factory depreciation is always a product cost. in manufacturing overhead. The depreciation of an office building. Office is going to be your administrative. Depreciation of a robotic equipment to assemble a product, okay? Well, it's a product cost because it's at the plant, but it's depreciation, so you can't directly trace it. So it's going in the default bucket. How about the electricity used to operate the factory? Okay, you can't directly trace it to the product, but it is a product cost and it's manufacturing overhead. So everything that goes in manufacturing overhead is usually considered an indirect cost. Okay, here comes one now. Janitor supplies at the factory. Okay, it's not direct materials and it's not direct labor, but it is at the plant, so it's going in overhead. Fees charged by collection agency on past due customer accounts. Okay, that's not happening at the plant. And it's not, the sales group isn't going to get involved in that. So I'm going to pick admin. Okay, so sometimes it's just a matter of getting to the process of elimination. Okay, so fees paid to lawn services where? At the office grounds. Okay, then that's period cost, administrative. The maintenance costs where? At the factory. Okay, maintenance at the factory is always a product cost in manufacturing. How about the oil lubricants for the factory, plant, and equipment? Okay, so yep, once again, it's a product cost. And I just picked the wrong one. So product cost, MOH, manufacturing overhead. How about pens, paper, and other supplies used by the accounting department? So accounting is not at the plant. You might have someone from accounting at the plant that's doing some reports, and you might have to know that person's salary. So there is a way. It's just up to that business where they want to categorize a lot of this stuff because it's their costs. They can kind of group it any way they want to, just as long as they subtract it and account for it. So they really know how much cost is going into each product. So accounting isn't at the plant and it isn't in marketing. So it gets kicked to administrative. Yep. Repair costs for what? The factory equipment. Okay, the factory equipment. So, just a second. All right. All right, that's the old manufacturing overhead, which is a product cost. How about rent for a warehouse? What are we doing in the warehouse? We're storing work in process and finished goods. Or yeah, finished goods. So, all right. Work in process is where the manufacturing's happening. Finished products are ready to be sold. So I am going to consider that rent because you're doing something for the products. Let's just see if they agree. Okay, that's fine. How about the salary of a physical therapist who treats the plant employees? There's a good one. So they're probably at the plant. So because they're doing the work at the plant for those employees, well, it's not direct materials and it's not direct labor, but you could argue that it's manufacturing overhead for that plant. How about the salary of the manager of a manufacturing plant? Same thing. As long as that manager doesn't spend any time on the assembly line, you should be able to argue that. If this manager does spend some time on the assembly line, we would probably want to keep track of how many hours he did that. And his salary because he might have to do it by an hourly rate. Part of his salary could be direct labor. Okay, it just depends. Okay, but you have to be very specific about that. And in fact, you would probably have that salaried manager clock in like he was an hourly worker so that you could track his labor costs separate from his salary duties, right? Okay, telephone charges, where? At the corporate office. Okay, that's going to be period admin. Travel costs of who? The marketing executives. So it's going to be a period cost and selling. Wages of who? Machine operator, where? On the production line. There we finally get to say that is a product cost and it's direct labor. Okay. Now this one can be a little bit of a stinker. Okay. Wages of a production quality control personnel. Okay. I'm just going to go ahead and check my work here. So let's try to reason it out. Their wages, all right? Most of the time we said wages are usually a direct labor, but what are they doing? They are inspecting the quality control. So more than likely they're at the plant. Okay, they're at the plant. And I think you could argue either one. I think you could argue if it's can't remember what we're making up here. Oh, well, we don't know either. All right. So wages of production quality control personnel, if that person or if that job spends a great deal of time on the assembly line and those products don't move on to the next stage of being finished until the quality control personnel has looked at it. You could argue, I think you could argue direct labor, but I'm going to pick overhead. Okay. Sometimes you just got to pick a side and there you go. But you wouldn't be wrong lumping them in direct labor if you wanted to, because like I said, it's your business and you're not reporting this information to Gap, remember? So anyway, that's pretty much a good way to divide up quite a few different classes of costs. All right, now we're going to go to this sheet. Okay, now we're going to do this one together because we'll be using the same numbers. And then the fourth one, you're going to do an exact same problem with a different set of numbers. All right, so we're going to open up all of the things that we have here. And I am going to use my template. Okay, the template. And we're going to put in look, we've got beginning balances for all three of these accounts and ending balances for all three accounts. All right. And so this is for a year. So this is 2000 year 8. Okay. So this is a year. We're going to put together a statement of cost of goods manufactured, and then we're going to prepare an income statement. So we'll come back to pulling out that statement of goods manufactured. I want to put these beginning and ending balances in my T accounts here. So here we go. Here we go. So 44,250 and the ending balance for materials. Be sure to watch. Here is your ending balance. Notice this number is the most current, or that was the beginning of the year. That's the end of the year. So you really have to watch what you're putting in. If you start going this direction, you will pick the wrong numbers. All right. So let's key this in. Okay. And then the beginning work in process is 63,900 and the ending work in process is 80,000. Okay, and then finished goods had a beginning of 99,800. Okay, and then it had an ending balance of, nope, see, I just about messed up. It's 101,200. The ending balance is 99,800. So let's make sure that we've got our beginning and ending of our inventory accounts in place. Okay, now we're going to use these numbers here to start to put together the cost of goods manufactured, or your income statement. All right, so we're going to follow, and notice this is in alphabetical order or some random order, so it doesn't help you with which ones go where. So this is something that we're just going to have to kind of work with. All right, and there probably will be an opportunity to put, we're probably going to have to calculate a few things on the Excel spreadsheet. So here's what we're getting ready to do. We're getting ready to do one of these and one of these. Now, I went ahead and had you open both because we might be kind of able to do things at the same time. All right, so these are the labels. So both of these statements are going to need the label for the year ending. So you might as well put them in where they go. Okay, there's nothing wrong with doing that. It's nice to get that over with. Okay, here's the income statement. You can start to fill in some information, and you can see this is our, okay, these are our labels, right? So we're going to start with sales, cost of goods sold, gross profit. Okay. And usually your biggest number on in your list is your sales. And sure enough, there it is. Okay, sure enough, there it is. So if you want to go ahead, let's go ahead and put in some labels here. Sales, okay. If you start to type it wrong, of course, it will change to red. We're going to have to come up with our cost of goods sold. Okay, so let's go ahead and put our sales amount in. Here's another thing you can do to help yourself out with these problems. I would like to have this list over here so I don't have to scroll up and down. So why not get your snip out, and you can highlight all of this and make a quick screenshot here of that. And I'm going to put it in right here. So maybe I can follow my numbers a little better. All right. All right. So down here is sales. All right. So my sales are the biggest one. So 3,850,000 goes right there. Okay. Let's go up here and look at what goes in the top of the statement of cost of goods manufactured. We start with a beginning balance. We start with the beginning balance of WIP. Yep. So you should be able to find work in process inventory. We'll put that here. Okay. And we can put the amount in. So here is the beginning balance right here beside us. So 63,900. Now we're ready to look at the direct materials T account. Okay, so we're going to put materials inventory January 1st. Okay, and I've got that T account right here. Okay, so we got to go get that label. The beginning inventory of the materials account. So there's quite a bit of stuff to go through here. Okay, but you'll catch on pretty soon. And if you put something in wrong, it's going to start fussing at you. I'm going to go ahead and put what we have here to follow along. So you start with the beginning balance in inventory, in materials inventory, then you add any purchases that you have. So let me see if they'll just let me type in purchases. Okay, yes. And then we're going to get, after purchases get added, cost of materials available for use. Ooh, hey, that is what I suggested that you did here. All right. So we're going to put, we can let me put these puzzle pieces in here just so that I can get some figures when I need to also. So I'll try to hurry here. All right. So the amount that we're purchasing, and it says materials purchased. So if you tried to find just the word purchased, you're not going to find it. 556,600. Now I'm going to add these two numbers together, okay, equals the beginning balance plus the purchase. And there is our amount for our available. Okay, so we're going to be able to use that in our cost of goods manufactured, right? And then we already know how much is in the ending balance. So we're going to be able to figure out the direct materials used. Okay, direct materials used. Here's how you're going to figure it. Here's how much we had available. And if you subtract the ending balance, here is how much we are. This is how much is going out of materials and into work in process. Okay, so those two numbers have to match. Direct labor. Okay, direct labor, they said is 1,100,000. Okay, where does that come out of? It comes out of account wages payable. Okay, so if you need to see that. And then manufactured overhead. We've got quite a few things to put in overhead, right? So I'm going to get rid of, actually, I'm going to add a little more room here to this manufacturing overhead account. Okay, so that we have plenty of room to put in what they're telling us is considered overhead. Okay, so first one is advertising expense. Well, that is not a product cost. That is a period cost. And I have a selling expense account sitting here, so I might as well use it. So we're going to put 400,000 here. This is advertising. How about depreciation expense of what? Office equipment. Okay, so I'm going to go ahead and have an administrative. So I have a place to put this stuff. Administrative expenses, and remember, selling and administrative expenses are period costs. Because they're expenses, they have a debit normal balance. And we're going to use depreciation of the office equipment. Okay, so that's 30,000 there. Depreciation of factory equipment. That's our first manufacturing overhead. All right, so let's go ahead and put depreciation beside each of these. And this is advertising expense. So we remember what that's for. So now we're going to put depreciation for factory. Depreciation factory. All right, we're going to put that number here. Okay, so 80,000 goes there, not 8,000, 80,000. Watch your zeros. They can be the death of you. All right, so 1, 2, heating, the heat, light, and power at the factory. And then indirect labor is also going to be overhead. So I'll just put heat, and we're going to put that amount, 53,300. Okay, then indirect labor, IL is indirect labor. Okay, anything indirect is going to be calculated as overhead. Now we're at materials purchased. We used that already. So if we had this on a piece of paper, we would have already crossed that off, okay? How about office salaries expense? That's gonna be an administrative expense, yes. So 318,000, and we can put OFF salaries there, so we know that's what that is. We have property tax, where? At the factory, okay? So that's gonna go in manufacturing overhead, so property tax. And that property tax is 40,000, okay? Now we have property tax for the office building, okay? So that's going in administrative. Okay, so property tax, office. And that's $25,000. Okay, then rent. Rent for what? The factory. Okay, rent for the factory. Okay, so factory rent. And that property tax, I want to put an F there to make sure that we know that's for the factory. So the rent is 27,000. We've already put sales in on the income statement. That goes at the top of every income statement, and it's the biggest number in the bunch. Then sales salary expense. Here comes another selling expense. So sales salary gets added to selling. Okay, and that is 200,000. Okay, supplies, where? At the factory. Okay, so supplies. 9,500, and then miscellaneous. Well, whose miscellaneous is it? It's the factory. All right, so we're putting that in. And I will put factory. And it is 11,400. Okay, so I guess I can put an F here just to double check that that expense is indeed at the plant or the factory. Okay, you can miss something pretty easy. Okay, so now we know where all this is going. Now let's go to the cost of goods manufactured. And once again, we're going to look at an example right here. And then we've got our numbers to go in. Okay, we started with, so let's go ahead and put this in. Our beginning balance in materials is 44,250. We have purchases. Okay, so it says materials purchased, 556,600. And then we have a subtotal. Okay, we're going to use our materials account to know how much we had available. Okay, how much we had available in the materials account. So let's go find what we need for this description. So I'm looking at available, okay? So the cost of materials available for use, there it is. So look for the word available. You're going to have 3 of those. All right, so we're going to calculate that. We already have in our T account. So I got 600,850, right? And then what happens? Okay, after you have put in the cost of materials available for use, now you're going to subtract. We're going to subtract the ending inventory of materials inventory. Yep. And I know that that can be rather difficult to see. All right, but and then we're going to have, okay, so what we're trying to get to is the cost of direct materials used. So I'm just going to type this and see if it lets me put it in. Cost of direct materials used. Okay, so far so good. Uh-oh. Nope, they don't like that. So you might as well not mess around with typing it in. Go find it. Okay, we're going to need materials inventory at the end of the year. So materials inventory as of December 31st. So it should be up close here. There it is. You can click it 3 times and copy and paste and put it in. Okay, this is going to get subtracted. It's going to get subtracted. So if we look at the ending balance for materials, 31,700. I'm going to put this in here and I'm going to see if it lets me. It looks like it did. Okay, so now this one is going to be called direct materials used. Okay, so up here somewhere. There it is. Sometimes the wording is different. Depends on what the company decides to call it. So cost of direct materials used in production. I would have just put direct materials used or used direct materials. It just depends on what you're given. Now be careful here. Okay, what we want is this number, the inventory at the end of the year gets subtracted from the amount of the cost of materials available. So we can go back to our T account for materials and we know how much the direct materials were used. So the amount used comes out of this account and goes into manufacturing. And we just move over here. We should get 569,150. Okay. Okay, after that one, we're going to just directly report direct labor, I believe. Yep, direct labor. Okay, so let's just go find direct labor for, there it is. Okay, there's not anything extra to it. So you could have typed this in. Let me do that. Okay, direct labor. Okay, and they gave that to us. So direct labor ended up being 1,100,000. Okay. And then manufacturing overhead. We've got several things that go in manufacturing overhead. We did our best to accumulate what they are here in the manufacturing account. So we're going to have an amount description and then the amount. So let's put all our labels in. And I believe they go in just the order that's on here. Okay, so here they have the first one that is on the list is depreciation of the factory equipment. So let's go ahead and try to put that one in. Depreciation of the factory equipment. So you'll need to do a lot of cutting and pasting here. And I'm not having a 1, 2, 3. There we go. Okay, bring it down. Okay, the next one is going to be heating and yep, heat, light, and power factory. Okay, so let's get our labels plugged in, and then we'll put amounts. Okay, the next one is going to be indirect labor. Okay, so there it is. You could probably type that in pretty quick, but why make it? All right, so now we're down to property tax for the factory. Okay, and then rent for the factory. So see, it served us pretty well to put that in, and we're going to be able to calculate that pretty fast. Unfortunately, you can't calculate in these spreadsheets. I wish you could. Okay, we want supplies at the factory. Whoop. Bring it down, and then we want miscellaneous factory. So when I was doing this, learning all of this, I didn't get these labels. I had to kind of try to memorize all of this. All right, so now let's start to key in the amounts that we did here, right? So we're going to have an accumulation of these overhead amounts. So 53,300, and I'm going to try to focus. Sometimes when I talk, my focus ability stops when I'm working on something. All right. Trying to be careful. Okay, so it looks like we got to the bottom because suddenly we got an equal sign. So then let's add up all of these in here. All right, so let's see what we got. If we keyed these in correctly, okay, we're going to move over and put 336,200, and this is going to be total manufacturing overhead. So let's see if total manufacturing overhead. Okay, let's put that in. Okay, now what happens after we get that in here? So then we're going to have total manufacturing costs. So these three items, here's your direct materials, here's your direct labor, here's your manufacturing overhead. We're going to add those three together for the period of time, which is for the year. Okay, so we're going to add these together and come up with a total. And that's going to be total manufacturing cost for, so let's go see, total manufacturing costs incurred in 2000 year 8. Okay, so that's going to be here. We're going to add these three together. So I'm just going to put them down here. Okay, so this is going to be direct materials. Oh, I didn't mean for that to happen. Let's put that. Yeah, let's just put it here. Yeah. So we're going to have direct materials, direct labor, and manufacturing overhead, just to keep a label on it. So we're looking at 569,150, 1,100,000. Oops, one too many zeros. And then manufactured overhead calculated to 336,200. If you add all those together, you're going to get 2,550,350. See, I just about didn't put the right number in. And it's always good to put your equal sign there. So this is period costs, right? Period costs for year 8. Okay, so those are the costs that came in for the year. All right, what comes next? Well, we go look at the list. So then we want total manufacturing costs. So these are the period costs. Now we're going to take this number and add to all the way up here. Yep. Okay, so we've already got this number. Now I'm going to put work in process, beginning, okay, beginning inventory. All right, and we've got 63,900, and we're going to add those two together. Okay, we're going to add these two together so we can report it. And this is total manufacturing costs, total manufacturing costs. Okay, and that's all the costs you have in WIP. Yep, we've just evaluated WIP. We started way up here. We added these things. Then we found out the total manufacturing for the period, and now we're just simply ready to put total manufacturing costs. All right, and that means that these two get added together. Okay, so I do want to put an equal sign. So we're following the right one, 2,069,250. Okay, then at the bottom we'll have work in process, ending inventory, right? So we got to go find work in process, ending inventory. Okay, so work in process ending inventory is going to be December 31st. Let's put that in. And they said that it is 80,000. I'm just going to put it in there. I'm not putting, I haven't put in, I guess I did subtract that one. Okay. Okay, and this is 80,000, not 8,000. If I put a negative in here, I'm just going to see if it takes. Okay. And then total manufacturing costs incurred. This is going to be a negative. No, don't put that as a negative. That's for the period, right? That's these three. And then we add the work in process beginning. So that gets added. Okay. So let's not put any negatives in where they don't belong, but you do subtract the ending balance of work in process from total manufacturing costs. This is also known as, that's good enough for me. Let's just stop. So now down here, total manufacturing costs, I'm going to subtract WIP ending. Okay, you can put a negative sign there to remember to do that. Okay, all right, hang on. I'll fix this so we don't get that error. Okay, we're going to subtract process. Let's take out that equal sign. So then you'll be able to read it. Okay, then you subtract your WIP, and then you're ready to get a total. This is going to be, this is the cost of goods manufactured. Yep, that's what we just put together, but it took so long that we forgot what we were working on. Yep, so you can abbreviate for that one. Okay, so let me go ahead and spell it all out though. Cost of goods manufactured. So if something's manufactured, that means they're finished, they're processed. And that's going to cross over to finished goods. So our ending inventory is 80,000. And then we're going to subtract that from total manufacturing costs. And now you will be able to report what is going on right there. Now, let's go ahead and put this in. It's a description. That's why we did this statement in the first place. So let's go up here. Cost of goods manufactured. Do not get that confused with cost of goods sold. Okay, it's not the same thing, but it sounds like it is. Okay, so I got 1,989,250. Now, I'm going to return up here to my T accounts. Okay, because we want to put all the puzzle pieces in case something happens. All right, so the manufacturing overhead, we needed to total that, and we did that here. So that's going to come out. It's going to come out. We did a total here. So it's going to come out of here, which I can show it going out as a credit. And when it comes out as a credit, it goes in here as a debit. Okay, so there that is. And we know that all the period costs, the total manufacturing costs incurred for the year. So we can just add those together to double check our math here. Okay, yep. And then we're going to come up with, so let me put a equal sign here. Then we want another equal sign so that we'd know our total manufacturing costs available. Total manufacturing costs available. The word available ought to be there, but that's okay. So let's take the beginning balance plus the period costs together, right? So there's where we're getting the 2,069,250. And then we have an ending balance here of 80,000. So to find the cost of goods manufactured, you take your available and you subtract your ending. Okay, your ending. So we're just kind of double checking our work here. Let's pretend this was a test, right? So we can double check it, make sure we're getting the right answers. So the cost of the goods that were manufactured is 1,989,250. Okay, I'm feeling quite confident that we're doing all right. Okay, so this looks pretty good. Okay, now we're not quite done yet. So now that we know the cost of the goods that we manufactured, they need to go out of WIP and into finished goods. So 1,989,250 comes in. We need an equal sign. Okay, equal sign, and then we need an available amount. I think it's worth knowing what that is. Okay, so our total available finished goods is 2,090,450. Now we're going to be able to figure out how much was sold. Yep. When you credit finished goods, that's for the cost of goods sold because it comes out of finished goods and it's going to go in the cost of goods sold. All right, so let's do the math here. We're going to take what's available and subtract the ending balance. So here is the cost of goods sold. Yep. You say that's not the cost of goods sold account. No, it isn't. But that is the amount we sold because it's being credited to finished goods, and we will debit the amount that we just found. Okay, so let me scoot over here and get it. If you don't have to rekey something, that's a good thing. Okay, so cost of goods sold. And now we know. All right, so now let's go ahead and finish our income statement. We didn't know what this cost of goods sold is, but we're going to review how we got our numbers. Okay, so once again, let's go look at our income statement here. So I'm going to bring this over so we can look at it. And if I have to, I will put it at the bottom of the problem because we need a little example. So notice, we're going to create this income statement like this one. So it's just not a matter of putting in the cost of goods sold like we've done in the past. We've got to flesh it out right here. All right, so what's the first thing? We're going to have finished goods inventory on January 1st. So let's go find, and if you want to, no, it's okay. Finished goods inventory on January 1st. Come on. There we go. Okay, we're going to bring that in. That's directly below the cost of goods sold. So now we're going to calculate it. So let's put that in there. And, okay, I want to move this down. Okay. Yep. Okay. Here we go. Oh, I've got this in here twice. That's funny. Well, I'm ready for an example anytime you need it, right? So our finished goods is going to be put, this is for January 1. So whatever finished goods were right here from our list, okay? And then we want to go look again because, like I said, we forget how it goes. And this is this part. So then the cost of goods manufactured, that's what we just found in the statement up here. So let's go get the cost of goods manufactured label. Okay, cost of goods manufactured. I think it's up here. Cost of goods manufactured. You got to watch your the past tense of your verbiage here. Yeah, it gets that serious. I'm having a heck of a time. Okay, sorry. Still not what I want. Okay, let me slow down just a little bit. Okay, let's bring cost of goods manufactured, and those two get added together. Okay, so the cost of goods manufactured, we can use what we found here. Okay, so over here in WIP, the cost of the goods manufactured is 1 million. Okay, 1,989,250. 1,989,250. Now we're going to add those two together. Okay, we're going to add them together, and the statement calls it cost of finished goods available for sale. Hey, there's that available for sale that I've been promoting. So cost of finished goods available for sale. Let's bring that down and put it in. And this amount is going to be subtracted from the cost of goods manufactured. So it's in there as a negative. So they said, oh, I gotta give a total here. So the cost of goods available. So if we go to finished goods, there it is. Hey, we didn't calculate that in vain. So $2,090,450. Now we're going to use the ending inventory of finished goods, right? Finished goods. So this is going to go in here as a negative 99,800. Oh, just a second. It doesn't like it. It doesn't like us putting that in. So one time they want it, one time they don't. So you're going to have to make it work. You're going to have to remember that you're going to subtract that. So let's go find the finished goods inventory at the end of the year. Okay, so we'll put that in. And we've already done the math for this, I believe, because what we're trying to find now is the cost of the goods that sold. Yep, cost of goods sold is what? Cost of goods sold. So finally, we find out what that is, right? And when that gets subtracted, we've already got it. The cost of goods sold is sitting right here in cost of goods sold. If you go and look at your finished good account, what came out of finished goods is the amount of cost of goods sold. So I'm not going to put this in as a negative because it didn't like it. And I don't know if it would let you anyway. So I guess I'm going to try it. I don't like it when the manufacturer, putting negative in there says it's out of range. Okay, so this is what I was talking about. This is what they used to do. So now, good grief. Remember our little template, right? I don't want to do that because it's going to mess up my numbers. All right. Remember our little template about sales minus cost of goods sold. What is the subtotal after you figured your cost of goods sold, right? Gross profit. Yep. Gross profit is a subtotal here after you subtract the cost of the goods that you sold. So gross profit. Okay. All right. So we can calculate that by just throwing that in here. Okay. So if we have sales of 3,850,000 and the cost of goods sold equals, okay, so I'll put COGS on here, and that is 1,990,650. Now we're going to get gross profit. Okay, so let's do the math here. You can use GP for gross profit if that's what you want. Okay, but you do have to remember to subtract it. Because if you end up with a bigger number than Because if you add that, you're going to have a bigger number in gross profit than you are in sales. And that's just not logical. Okay, so let's put the amount, 1,859,350. Now we're getting ready to do operating expenses. So the admin account and the selling account that we, I think, put all this stuff in should be up here. Okay, should be. So if I go over just a little bit, there's a selling expense account. Now they put administrative expenses first. I've never seen that before. Nope. They did not follow their own rule, but once again, you're using managerial accounting so they can decide what they want to do. If you look at your administrative expense T account, there are those three. Okay, so we've got to go get titles. We've got to go get titles. So let's get started. I'm going to put selling in first. They may not have displayed them first, but I'm going to put them in the order that I'm used to. So now I want to go get advertising. We should see a label for advertising. There it is. Advertising expense. Let's put that in. We're doing the selling right now. And then the sales salaries. So sales salaries is the only other selling expense that's here. So let's bring that down. And we can put the numbers in if we want to. So advertising is 400,000. And then sales salary expense is 200,000. And those two get added together. Now notice they don't put a total selling expenses line, which they wouldn't be wrong if they did. Okay, but you could calculate that here by just, I know you can add that together in your head, but let's just say those were numbers that you wanted to make sure what that number is. Now we're also going to come up with these three because they're going to go in, okay, as a total for admin. So those three numbers, there you go. So we're ready to go either way. So then admin gets depreciation of something in the office. I don't even remember. There it is, office equipment. Let's highlight it, bring it down. Okay, let's put in the labels first and then we'll put the numbers. So then we have office salaries. So it was good to categorize all these things before all of this. So it made this putting it together a little easier. Okay, and then the last one is property tax for the office. Property tax for the office. And I got to go up here to the labels. Property taxes office. Yep. Okay, so there's the third one. Now let's put in the amount. So depreciation is 30,000. Office salary expense is 318,000. And property tax office building, 25,000. And right next door, even though it doesn't say a total, that's where they want us to put the total. Okay, so sometimes they'll have a total line and then you would put it there. All right. So these two need to be put in right here because selling and admin are considered operating expenses. Operating expenses. So I think I have that somewhere here. Yeah. So total operating expenses. Yes, I'm still here. Don't you dare log me out. Okay. Total operating expenses. Let's see. There it is. They do put some in here you don't need. So crossing all these off the list. No, I think they are all used. Every once in a while, they'll throw some on here that don't belong. And I don't think they're going to do that to you yet. So, all right, we're ready to put total operating expenses. And we could simply just add down. So admin expenses. So just to double check the math, we always want to do that. So 373,000, and then selling expenses, all right, is 600,000. And together they get added up to total operating expenses. And of course, it's 973,000. And there is the amount we're going to put, 973,000. I just about did a transposition error. Sorry about that. Okay. So, oh my goodness, what were we trying to find at the bottom of this thing? So we started with sales, cost of goods sold. We proved cost of goods sold. We subtracted it to get gross profit. We proved the administrative expenses, even though this is in the wrong order. Selling should go first, then admin, but then both of those get added to operating. This amount must be subtracted. I would really like to put a negative there, but it doesn't let me. Because by the time you're down here at the bottom of this statement, sometimes you forget what you're doing. Okay, so I can't do it. But if you go look at our examples that we've been pulling from, they get to net income. Okay, so it looks like we've got enough in gross profit when we subtract our operating that we're still going to have a positive number. So let's key in net income, and then we're going to let Excel help us just a little bit. Okay, so there's the gross profit. So here comes the net income. Okay, so we're going to take gross profit and subtract total operating expenses. Yep, they're matching up. So my net income is 886,350. Okay. You're going to be able to put all these numbers in just like I did. Okay, so you don't have to worry about different numbers. I'm not saying I haven't made a mistake somewhere, because that happens to the best of us, but hopefully you're going to get to see that when I'm not in class, I can actually concentrate a little better to do the problems, okay? And so I highly recommend that you get some quiet time to yourself to try to put things in. And you get to follow this verbatim and get all the points for this, okay? So everything that's there, and we can always go over here and see, oh, the circle has been completed. Now you're going to do this one, okay? You're going to do this one. It's going to be very similar to what we just did, okay? And I am going to stop this video. All right, so I'm going to stop my share, and I usually say goodbye. Try to. I know this can become a lot, but you can do it. So, all right, keep up the hard work. We'll see you for the next video. Okay, here we go.